Hello, everyone. Welcome to this webinar. My name is Olukoyede Akintumile, and I will be your host, your anchor, and your guide through today's proceedings. Before we begin, I want to quickly thank everybody for deciding to spend some quality time with us today. We promise it is going to be an insightful and exciting webinar, and you will be glad you came. Today, we'll be considering a topic that, given the current socioeconomic climate we find ourselves in, cannot but be discussed. It follows from the sort of macroeconomic figures which our beloved country has been posting within the last year. We have seen rising inflation, rising unemployment, low interest rates, bitter recession, and of course, we have seen steps taken in an attempt at a recovery. And today we'll be considering all of that and more as we look at the topic, the road to recovery, the Nigerian economy, and you. Joining me on the panel today are three seasoned financial and economic experts. For our guest speaker today, we have Mr. Ugo Obi-Chukwu, popularly known and referred to as Ugodre. A little bit about him. Ugodre is a chartered accountant with over 16 years experience in financial management, corporate finance, and financial analysis. He's also an investor and a personal finance advocate with over a decade's experience investing in the Nigerian stock market. Ugodre is also the founder, and I believe that's where most of us will know him, founder and publisher of the popular economic blog Nairametrics, where he exercises his financial acumen on a regular basis. Thank you, Ugodre, for joining us today.
Thank you so much, Kayode, for having me.
Yeah, you're welcome. Also with us on the panel today is the Executive Director of FundQuest Financial Services Limited, Mr. Bisi Oni. Mr. Oni is a seasoned banker, investment and economic analyst. He was at various times prior to co-founding FundQuest, the head of research and economic planning at Financial Derivatives Limited. He was also the head of the funds and asset management at FBN Capital, the First Bank subsidiary, and he was MD and CEO at FBN Capital. Mr. Oni would also be bringing his expertise and experience to this panel as our co-speaker. Thank you, Mr. Oni, for being with us today. And finally, on our panel is our chief host, also a seasoned banker, an investment analyst, and an economic expert. He was at one time a special advisor to the Lagos State Governor, Lagos State Commissioner of Finance on technical matters. And at various times in the past, he has also served as the head of the capital markets at MBN Capital and CEO of FBN Securities. He's currently the Managing Director and Chief Executive Officer of FundQuest Financial Services Limited. I want to say warm welcome to our host today, Mr. Abiodun Akinjaeju. Thank you, sir, for being with us today. You're muted, sir, but we understand. You're still muted, sir.
Thank you, Kayode, and thanks to our guest speaker for your time this morning. We are deeply honored.
So before handing over the baton to our guest speaker, to the audience, thank you again for coming. If you have any questions during the course of this session today, kindly use the Q&A box on your screen. Whatever questions you have will be responded to intermittently as the program goes on. And if by any chance you happen to miss some important parts of this event, worry not, because we'll be sending you the recording of this webinar after the end of the day. So at this point, permit me to give the baton over to Mr. Ugo Obi-Chukwu. Ugodre, you have the floor. Thank you for coming once again.
All right, thank you very much, Kayode. Appreciate the introduction. Let me also use this opportunity to say a big thank you to Mr. Oni, the founder. It's an honor to meet with you online, sir, and to be part of this this webinar. I think you've done a very great job. For people like you, have done a very great job for this economy. Without people like you, a lot of us wouldn't be this savvy about economic issues, or wouldn't even have enough information or to work with, especially in this very convoluted economy that we find ourselves in. Also, special thank you as well to Mr. Abiodun, Chief Host and Managing Director. Thank you very much, sir, for having me here. And to our dear, participants, thank you all for being here. We are in a very precarious time in this country. I believe that at every point in time, every nation goes through this kind of period. I think it's usually a reminder for some of us that, economic emancipation or having a country that is sane and sound, it's not easy. So when we do one day find ourselves out of the woods, we will cherish so much everything that we've been through. I have a presentation. I hope that I can share my screen so that
Yeah, you can.
I can. Okay. Okay. I hope you all can see my screen. Really?
Oh, yes.
Okay. So I'm trying to do a. All right. I think this looks good. Just 1 second, please. Okay. Good morning once again. So I was told to come and present the road to recovery, the Nigerian economy, and you. When I saw this first, I asked my team, why me? Why am I the one to come and present the road to recovery? This very tough economy that we'll find ourselves in. Is it ever possible that we recover in our lifetime, or do we recover in this, political dispensation, or in this, political regime that we'll find ourselves in? Or are we going to have to, keep going to church or mosque or whatever religious, affiliation that we all have, and pray to God to get us out of this, mess that we kind of find ourselves in? However, I also went to church and I prayed. I said, okay, for this particular webinar that I'm doing, I hope that I'll be able to, give you guys a bit of an overview of what is going on in the economy and try to make sense of it for you, because there are a lot of numbers and being able to make sense of these numbers is not that easy. But I will try as much as possible to make sense of the numbers, and then maybe, chart a course towards recovery. I'm not Nostradamus. I'm not, someone that can see the future. But I think that as a student of economic history, there are certain things that countries that have found themselves in this kind of situation that we find ourselves in have done to get out of it. Most often, it's not that difficult. It's not nuclear physics. It's just the will and the desire to do some of these things, and you will hear them towards the end of my, in the course of my presentation. So like I said, it's the road to recovery in the Nigerian economy and you. We're going to start first with what we'll find ourselves in. I think it's a stark reminder that we are still in the midst of a pandemic. COVID-19 continues to be remain a bane in the economic recovery, not just for Nigeria, but for the global economy. This is number of cases that we have globally. 2.7 million people dead already due to COVID-19. 125.6 million cases globally, and some of us, especially me, I'm included in that 125.6 million. Sometime May last year, I also felt COVID-19. Before the talk of the second wave, some of us, we've already been in the first wave and managed to get out of it. And you can only give glory to God, because it was a very, very tough period, especially for me and my family, and I don't wish it on anybody at all. So Nigeria, we've seen 2,000 people dead already. Some of them very notable people that we all know. And then, of course, there are a lot of people that have also recovered from it. Most often we talk about those that have died out of COVID-19, but sometimes we forget to also remember that there are a lot of people, warriors who have gone through this and have recovered from it, the better. So in terms of vaccination, 489 million people are vaccinated. We still have a long way to go. I think the Earth has about 7 point something billion people. So we are not even up to 10% yet. But I think that the pace of the vaccination is going smoothly so far, so good. And we want the vaccination pace to really move fast so that we can start to, have a semblance of the economy that we once knew, or the global economy that we once knew 2 years ago. We can't wait to see things come back to normal. A lot of people have said that we might be able to get back to a normal global economy in 2022. I think I saw a report from someone like Bill Gates saying that it can be until 2022 before we get out of this whole pandemic. So, but it appears that here in Nigeria, some people are back, because if you go out, if you move around, you see that people are getting back to normal. People don't even wear masks anymore. People are going about their daily business. Some people think that, they are even immune to the virus. Some people don't even believe that there's a virus, and maybe it's just a big man disease or something. So in Nigeria, I think that we're kind of back, even though the private sector, the organized private sector is still, operating a lot of in the midst of their BCP plan, business continuity plan. So you still have a lot of people working from home, and that sense of that we're still in the pandemic is still there. But by and large, I think that we're still in the pandemic, whether Nigerians like it or not. The global world is still in the pandemic, and things, could remain the same till at least the third quarter of 2021 before I think we'll start to get out of it. So what are we facing as a country? I highlighted a number of things. I'm going to put some things in the chat now. So as I'm going through, please just feel free to kind of feel free to just 1 second. I just want to put something up on the chat for you all to just choose any three, because there's so many things wrong with Nigeria at the moment, and I think it's important that we all kind of put some of these things into perspective and have our say. Like to just know from you guys. So I've put a question in the chat. If you had to prioritize to fix any of these plenty Niger issues, it's also on my Twitter handle, by the way. I just want you to choose any top three of the things that you would like to fix in Nigeria, because this is all collective. It's not just me alone. So there you go. It's in the chat. It's in the chat box. Feel free. Just say 1, 2, 3, or 4, 5, 6, or 2, 7, 8, whatever. It's up to you. You decide, and then we'll talk about that later. But what are we facing as a country? Currently, we are facing one, a stagflation. A stagflation is basically high inflation rate or galloping inflation rate and tepid GDP growth rate. It's one of the worst form of economic malaise you can have any country face. The likes of the UK faced stagflation in the late 70s, and we are in fact, most Western countries don't even they can't even imagine stagflation happening within their regions. But we've been in stagflation for the last 5 years, and I'm going to explain a little bit more about stagflation in the next couple of slides. In terms of high unemployment, I think we all saw the numbers 2 weeks ago. Startling numbers, incredible numbers that would scare any government. We saw those numbers. I'll get to that as well. High poverty rate, we suffer high poverty rate in this country. I don't know if you guys have noticed there are a lot more beggars on the streets than I've ever seen in my 40 plus years on earth. Whether it's in Lagos or Kano or Onitsha, wherever you go to, there are beggars everywhere. So the poverty rate is actually quite high. The good thing, like I always tell people, is that in Nigeria, people seem to find their level. I think we are all made of water. So we always find our level one way or the other. So it's either you have one meshai on the street that you can just go and eat with 200 naira, you buy your bread and egg and tea and you're good for the rest of the day. Or if you can gobble up 250 or 300 naira, you can go and buy a very nice eba and a foriro and eat under the bridge. So, people still manage to still, eat, but that is actually abject poverty. There's no other way to define it. We are, the poverty rate in this country it's huge. Insecurity, I think I don't need to explain that. Insecurity remains a huge problem for us in this country. Social unrest, we saw a bit of it with the EndSARS protest. But in case some of you don't know, there's a lot of it going on across the country, even though maybe it's not in your neighborhood, but there's a lot of social unrest still going on, and I'm going to speak to that at some point in the presentation. And for the last one, zero trust in governance. I don't know how many of you trust this government or governance in general, whether it's the National Assembly or your local government or or your state governors or the presidency. There's just zero trust in governance and ability of government to get us out of the mess that we find ourselves in. So let's talk a little bit more about stagflation. Remember, I said that stagflation basically is inflation rate galloping, right, and then your GDP rate dropping. So the typical consequence of a stagflation is high unemployment. So these are the things that economists have researched about years and years ago. So when it's happening, it is not a surprise because that's exactly what it is. So if you look at our inflation numbers, you can see that from January 2019, things were sort of like a little bit manageable. And then towards August, September, you see, just here, that was when they announced the border closure, right? Just around here. That's when this border closure story came about. And then gradually food prices, watch it, started going up. And as it was going up, it dragged the consumer price index. This green bar you're seeing here is actually the inflation bar, and it's dragging it. And then the core inflation, this is the one that is not volatile. This is actually the one that I think businesses should track the more, the core inflation, and not necessarily the CPI, because CPI is a little bit, quite volatile. And you can see from here on, and then you move into March 2020, guys, just watch here. That is where we started facing COVID-19, right? And then it continues to climb and the oil prices drop, right? And then things start to get worse. And then sometime around October, okay, we start to hear rumors of an increase in electricity prices. And then sometime around here, this between June and August, if you all remember, that was when we had the very first major devaluation. We did have a devaluation sometime around March, but the next devaluation came here. And you see how this thing starts to filter into cost of goods and services, right? And then another devaluation occurs and then starts to go up. And then electricity prices are now finally increased, but that hasn't reflected yet. You can see it's a little gradual, right? And then you start to have all this, headsman crisis and all this banditry, and it starts to affect food supply, and then food inflation just goes all the way to the top. And that's where we are. And the common consensus for a lot of people is that at 17.33, this is just the start. We haven't even gotten there. It is likely that we might hit 20% inflation rate by the end of this year, the rate that we're going. And that's because we haven't yet factored, subsidy that might be removed for fuel. So if subsidy is removed for fuel, that means that prices are still going to go up. Electricity prices are still likely to go up by the second half of this year. And then, it's likely, very likely, that there might be another round of devaluation again at some point towards the end of the year, depending on where oil prices sit. So there are things that are still going to come. And so this stagflation that we find ourselves in, we are just entering it. It's still there. We still have our neck deep in it. And so you see the effect this is having on unemployment rate as well. And unemployment rate has gotten worse, from 2018 up until 2020. So you can see the gap in inflation. So we just went all the way here. This was just the third quarter of 2018. And then boom, see where we are by the fourth quarter of 2024, 33.3%. Interesting thing about the inflation rate is that we had about 10 million people drop out of the workforce. So not that they're unemployed, of course they're unemployed, but they dropped out completely. So they were not even included in the 23 or so million people that are currently unemployed in this country. And when I asked the NBS, what I was told was that they could not, these are guys who didn't even bother looking for jobs anymore because there was just no job. So and the way they calculate unemployment rate is they basically look at the number of people who are actively looking for jobs, right? And then remove those people who are actively looking for job or who have jobs, they're in a bucket. And then those of them who have jobs are taken out, and whatever is left are the people who are unemployed. So if you're not actively looking for jobs, you're not included in that pile. Doesn't mean that things are better for you. So you have 10 million people drop out. And unfortunately, most of these people are young people. Just look at the unemployment rate for young Nigerians. 42.5%. It's just incredible. So how can you have so many young people jobless? Isn't that a recipe for disaster? That's what it is. So you have about 12.7 million Nigerians. That's like the population of some countries. It's like everybody in the country doesn't have a job and made up of young people. And these are young Nigerians. I mean, I understand that some of them probably have a lot of informal jobs that they do. Luckily with things like Facebook and Instagram, people can actually go there and earn a living. But there's still so many millions of Nigerians out of a job, and these are the consequences of a stagflation. And like I said, the stagflation is basically the mixture between inflation and GDP growth rate. And if you see our GDP growth rate, it's been tepid for years. So from the time this government came in, see, right, by the second quarter, they had started inheriting a very slow GDP growth rate. The highest we've done was just over 6% or so, and that was during the end of the Obasanjo presidency, and then it started going down, and we've been under 6%, and now you can see that we're just above 2% before the first recession that we had in 2016. So we got in here, had a U-shaped recovery, got out in about 2017, gradually trying to come back up, have a dip here, come back again, and then we're struggling and we're here, and then all of a sudden COVID-19 happens. So you see, guys, when you see charts like this, it's not that economists, I'm not an economist, I'm a financial analyst, but I'm also a student of economic history. These things, are not just done out of fancy. They do mean something for you and I. And the point is, when you start to see inflation, when you start to see, your GDP growth rate at about 2%, it simply means that we're not creating enough jobs. We're not creating a robust economy. The economy is not big enough because GDP basically is me and your business and your brother's business and your sister's business and your friend's business, all our businesses combined. How well is it growing? So if my business is not growing and yours is not growing and your sister's business is not growing, then it means we can't employ people. It means we can't spend a lot more. And when we all can't do that collectively, then the economy won't grow. That's just what it means. It's just simple. And so you see that with this kind of tepid economic growth, there's just no way that we won't have the problem that we're having here, which is youth unemployment. So, my friends, the reason why we have this high unemployment rate, simple, because we have high inflation rate and the GDP growth rate is very poor. I will get to the reason why we're having all these problems and why GDP growth rate is not growing and why inflation rate is high in a bit. We've seen increased insecurity. These days, it appears the buzzword now is banditry. We don't hear of they've now gone from Boko Haram, to herdsmen, and now it's now banditry. That's now the buzzword. We seem to have very good ways of having buzzwords, but nevertheless, these are the insecurity issues that we face in this country. Whether you want to travel from here to the east or from here to the north or to the west, you're likely, God forbid, but there's a chance that people who make all these road trips would face all these kind of issues, and these things have severe impact on the economy because it means you can't do business. There's no cross-border trade. There's no inter-country, interstate trade is hampered. You can't have goods and services move around freely, and when you can't do some of these things, it causes a supply issue, and with a supply issue, inflation rate also goes up. So these are the kind of challenges that we're facing as a country currently. Please, just in case maybe I go off or maybe there's an internet problem, my WhatsApp is open. Please just send me a WhatsApp so that I just go talking as if someone is listening to me. So this is the security issue that we're having in the country. Then, of course, social unrest. I talked about the NSAS protest, and if you look at it, a lot of the people that led this protest were who? Youth, and you see them. If you have so many of them that are unemployed, what do you expect? They're going to be very angry. They're going to be very frustrated, disappointed in what's going on in this country, and you have a lot of them come out, to air their anger. And we still see pockets of these things in some key locations within this country. So it's not just that they need to wait for SARS for them to air their anger. They're still there. People are still angry in pockets of states across the country. You start to see all these various factions, rival factions pop up in various cities across the country. These are all the consequences of a stagflation, and that's why you see a lot of these things going on, whether it's court clashes, whether it's riots, whether it's even labor protests. These are all consequences of an economy that is in a stagflation. Now, zero trust in government. I don't know. What about you? Do you trust this government? Please respond. I don't think so. I don't think a lot of Nigerians trust this government. And to be honest, in as much as there are some positive sides to what they're trying to do, I think you can see a semblance of some of the things they're trying to do. It's a bit of a socialist inclined government, trying to spend money on infrastructure. They're building roads, they're building rails, investing in agriculture, all sorts of intervention funds just to basically support this economy. You can see all that going, but there's just something lacking in leadership. And I think that's the problem. We have a leader who probably has the best of intentions, but it's just lacking in terms of the will, the capacity, the drive. That there's nothing like having a leader that just moves things. You know what I mean? Like the person who is just in the forefront of trying to get us out of this country. It gives you some kind of motivation, and that's not what we're seeing with the leader that you have right here in front of you. So has it visited Lagos anytime recently? Has it commissioned any major private sector initiative? Has it even been to somewhere like the Dangote refinery, where we're spending billions of dollars just so that we can have some kind of oil, petroleum independence? So these are some of the things that I think is lacking in this country. And then even if you have a more charismatic vice president, they won't even allow him, shine. They won't even allow him do the work. So I think these things all cause a trust deficit in governance. And when you have a trust deficit in governance, people are just, basically frustrated. People are disappointed. People lose hope. And then even that will that we as Nigerians, we know that we have, you don't have that will to want to go in and want to do as much as you think that you can. So what are the causes of some of the things that we'll find ourselves in? Oil price dilemma. Oil prices are a major factor, that has gotten us here where we are. Exchange rate volatility is a major issue, which is also driven by oil, because with oil prices going down, it means Nigeria can't earn as much, forex as it will typically earn. And when you can't earn forex, then that starts to impact on the exchange rate. I've told a lot of people, and for those of you who are here, please, as well as you're saving your money in naira, try and have a bit of your money saved in dollars as well. Because so long as we are an import-dependent economy and a mono-export economy, we would always have exchange rate volatility. It's in the next 10 years, it's inevitable that we'll be looking at 1,000 naira to $1. It's just inevitable, and not because some of us are not trying to do well, or sorry, not because I'm trying to wish this country bad. It's just because that's the fabric of the economy at the moment. Until we start to change these things, we're going to remain here. We had a lot of bad, ill-timed fiscal policies. I did mention earlier on that, some of their intentions are good, but the timing of it is also very, poor. An example is the border closure. I understand the intention, but the timing of it and how it was implemented, I think was, if you look back in retrospect, it was bad for us in this country. And of course, bad governance, I don't say too much about that. Institutional corruption, ease of doing business, and poor infrastructure. I'm going to go into some of these things at some point. So volatility in oil prices. Oil price is very important to economic growth. I think I've said that already. With oil prices crashing, last year, this is basically, so if I layer on that inflation here, you would see a pattern. If I layer it on, it's almost similar, because you can see that it starts to go up. As oil prices starts to drop, inflation rate, starts to go up. That's the problem that we have, because our economy is perfectly correlated to oil prices. We're happy that it's climbing back up now. We're almost back to where we were pre-pandemic, but let's remember that we still have, OPEC Costs in place. So in as much as the government tells you that we are producing 2.2 million barrels of oil per day, we're only exporting 1.4 million barrels, and that's because of deal that OPEC has with its members, of which Nigeria is one of it. And the double whammy of this as well is, as oil prices is going up, ladies and gentlemen, fuel prices are also going up. Isn't it crazy? How do you have oil prices going up, and it's supposed to be a very good thing for you in the economy, but it's a bad thing because fuel prices are also going to go up, and it's going to go up because we import every single drop of fuel that we use in this country is imported. Yet we have the so-called 3 moribund refineries that are not working. And then the government wants to spend another $1.5 billion in a refinery in Port Harcourt. That's the ill-timed policies that I was speaking to earlier. But back to this conversation, we do need oil prices to go up, irrespective of whatever it does, downstream, in terms of fuel prices. I think we're better as a country if we find ourselves in a situation where oil prices are above $60, whether I would like it or not. I think I would take that over oil prices that are going down. Official exchange rate. Exchange rate, in this country is basically multifaceted. So you have different kind of exchange rate. There's the parallel market exchange rate, which all of us know is about 486 or 487, and then you have the I&E window, or the NAFEX window, like they like to call it, that is currently trading at about 420, or between 410 and 420 naira to a dollar. Now, I think that with exchange rate volatility, like we're seeing, you can see this chart. It's difficult for anyone to want to actually bet on this economy, and a lot of foreign investors look at the exchange rate volatility and the risk around holding Nigerian currency, and we'll find it very difficult to get in, to want to import forex in this country. I've always told people, like, look, we can't continue to be a country that relies only on oil to earn forex, and then we all want to have the same lifestyle like they have abroad. I just don't know how that works. We all want to buy Gucci bags. We want to go to UK and US to spend holiday. We want to send our children there. We want to go and do their masters. You want to buy the latest cars. You want to drive it. You want to wear the latest clothes. You want to use Apple laptop. You want to use an iPhone. Nigerians just love to consume. We love to consume everything. The latest, we have it. If you go and check Instagram, we are the top users in Africa. Go and check Twitter, we are the top. Anything foreign, we will be there. You'll find us there. So you can't be that kind of country. Nothing wrong with having that, but you can't be that kind of people and also don't have enough industry to also attract dollars. It's not just possible. You can't. And yes, the government, shares a huge part of the blame, but there's just no way as a people that we can do this or be, have one side where we like to consume, and then we don't have a way of balancing it out. What do you expect? 1,000 naira to the dollar is just a few years away. At this rate, there's nothing anybody can do, because everything that we like to consume here, we all import them. We don't make laptops. We don't make phones. The things that we use the most, we don't even make it. We don't even have any plant established here that can make them locally. So these are the things that we do face, and that's why exchange rate would always be a challenge for us in this country. We can't keep relying on oil, ladies and gentlemen. I think we've got to be able to move out of it. And in as much as the government has got a lot to do to get us out of it, I think some of us here also have a huge responsibility as well. Foreign trade, interesting to note that we actually have been exporting more than we've been importing. In terms of trade, that's physical goods, not services. It's when you now add services to it that we tend to import a lot more. And services include some of the software that we use, for what we either in our offices, brand, trademarks, and all these things. These are all stuffs that we all pay for, and these things are super expensive. Even things like travel, they are all services. They are all exports, but not for physical goods. But in terms of physical goods, because of oil prices and how strong or relevant oil is to our economy, we've always had higher exports. But look at what has happened since 2019. Since 2019, we have seen to import a lot more than we export. And ladies and gentlemen, I mean, this is also the period where the government today is saying that we must export more than we import. Buy the naira to grow the naira or whatever, or proudly Nigerian. But even at that, we're not exporting anything because we only just export oil. And even when we want to export, even when some of us want to export, this same government will not allow us. The devils at the ports will not even allow us to do what we need to do to export. And that's a huge problem. So you can see, ladies and gentlemen, that's the gap we find ourselves in. Look at our balance of trade. We've now gone from a positive balance of trade, from a very rich balance of trade in 2018, we've now gone to a trade deficit. And this also has a huge challenge for us as a country, because if you're at your highest trade deficit in about 38 years, then what you expect is a continuous pressure on the naira. And let's remember, we're in a trade deficit in the same period where we still have a lot of items that are banned. We still have 41 items that are banned, yet we find ourselves in a trade deficit. I've talked about ill-timed fiscal policies, whether it's the policy of the border closure, import duties, they raise it here today, they bring it down tomorrow, debt accumulation, because we don't import, the country doesn't earn a lot of revenue. You see government borrowing a lot of money. A huge chunk of the money that this particular government has borrowed, they've actually borrowed at very high interest rates, high recurrent expenditure. The government has no balls in terms of trying to bring down recurrent expenditure. So recurrent expenditure has remained high throughout the last 5 to 6 years. No reforms has been done. Projects that we have worked on, like the one that they want to do now in the Port Harcourt refinery, wrong projects that you don't need. Some of the real projects, in as much as they've been good, you also have some that are completely unnecessary because you haven't actually been able to connect trade. When you're trying to build out a real infrastructure or a road infrastructure, you are doing it in the purpose of trying to facilitate trade within states. So you're not just building roads because you want people to be driving on it. You're building it because you believe that it facilitates, it's a link from one trading point to the other. So I think the way that the government also looks at and approaches projects has to change completely. And of course, bad governance and corruption that we face as a country. Ease of doing business, I think I've spoken a bit on this already. Just my time is almost up. So ease of doing business is a challenge for us as a country. Whether you want to export something, you can't even export in this country. If it's to register, if you decide now that you want to go and register for taxes, you on your own, you just get up, you go to the tax office and say, okay, I want to be a good Nigerian. I want to register my business so I can start paying tax. That's the day that your problem has started. Because from that day on, they'll start giving you all sorts of hell. You can't even apply for things successfully. You can't even get permits. Even when you decide to start a new business, it's at that time that you see the government, they will come and they will ban it. And then sometimes you also see government competing with you. And you're like, how did government all of a sudden turn to my competitor? Particularly Lagos State government, they want to compete with you in everything. They also want to have their own okadas. They want to have their own buses. They want to have their own restaurants. They want to have their own hubs where people can go and work, like internet hub. So they're basically competing with you neck and neck. Even they're even in the business of lending money to people. So I think that these are some of the challenges that a lot of startups and small businesses face on a regular basis. I'm sure a lot of you here face challenges like this as well. Of course, poor infrastructure, I don't need to say too much about that. We know how bad our roads are and challenge you have with electricity. The government has tried to respond to some of these things in a number of ways through fiscal policy and monetary policy. in terms of fiscal policy, we've seen the government get loans from the IMF and the World Bank. They've injected billions of naira in stimulus. We had the CBN push out the other day saying they spent close to 1 trillion naira just trying to help this economy resuscitate. We've seen a lot of infrastructure development going on. I think I mentioned that already. Lockdowns have continued. Sorry, lockdowns were a mainstay last year, but it's now unwinding. And then, of course, the fiscal policies in terms of granting, tax breaks. The government did grant some tax breaks to SMEs, just as they also increased the rate of VAT. First subsidy, it's inevitable that that's going to get removed sometime this year. These are all some of the fiscal policies that the government is doing. The government is also reducing electricity first subsidy. That is why electricity prices have gone up. And then, of course, maybe at some point this year, we might see them eventually have the balls to pass the PIB. So this is basically been the government fiscal policy response. There's something missing here. The government just recently said they might be looking at tapping money from the Eurobond market. They weren't planning to do this year, but it looks like it's something that they might be exploring. So that, if they do, would be one of the fiscal policies that the government is introducing. We're also seeing monetary policy actions from the current CBN, whether it's capital controls in terms of how you bring in money and get money out, monetary policy in terms of NPR and interest rates, and then, of course, some of the intervention funds that the government is doing. In terms of capital controls, the reason why you can't transfer money out of this country as easily as you used to in the past is because of capital controls. The CBN is basically trying to manage how Forex is taken out of this country. And then you also see devaluation. Now, policy of remittances, the reason why the CBN is pushing hard on remittances is because remittances gives us about $1.2 billion annually. Now, that's for cash remittances. But if you look at remittances in terms of all the things that were brought into this country, whether it is your brother sending you motor vehicles for you to sell for him, or sending you TV, or sending things or items, whatever it is, I think that number is closer to $5 billion quarterly, actually. So about $20 billion annually or so. But in terms of the cash that is remitted through Nigerian banks, it's just about $1.7 billion. And the CBN is hoping to push this to about $3 billion, which is what we got in 2019. So that's why you've seen a lot of this policy on remittances being pushed by the CBN. And of course, issues around cryptocurrency is also a challenge. Now, what do we do and how do we get ourselves out of these issues that we find ourselves in? We do have remedial actions. Like I've said, we've got to prioritize ease of doing business. I think we've got to be better with our ease of doing business policy. We can't have a country where doing business is difficult. The government needs to really, you gotta have the balls. You've got to have the balls of what it takes to basically curb ease of doing business. There are too many regulatory bodies in this country. So the sooner we start to reduce them, the better for us. All we're doing is basically just working hard and paying the salaries of an inefficient civil service or inefficient regulators. So I think that we've got to prioritize ease of doing business as a country, because if you don't prioritize ease of doing business, then there is no way we can get ourselves out of the quagmire that we currently find ourselves in. A lot of market reforms has to happen. We have seen market reforms at some level in this country. I think we should encourage a lot more market reforms. Even for some markets that we reform, I think we need more reforms. I'm happy with some of the things that SEC is doing. I like the policy on crowdfunding that the SEC pushed out. I think it's something that would mean a lot in this country, particularly in terms of capital formation. It's going to be very huge. The reforms that the insurance sector is also embarking on, I think they should even double down on it. They are slowing down a little bit because of COVID-19, but I think that's just an excuse. We need a dominant and a very strong insurance sector in this country, because if you have a very strong insurance sector, then that helps unlock a lot of capital, particularly a lot of debt capital that we have today in terms of real estate all across this country that we can't even monetize. Civil service reforms, I think that's something that we've got to do. A few years ago, the Oronsaye report came out telling us all that we need to do to reform the civil service, and the government has still not done anything about it till today. Perhaps maybe labor is the challenge that they have, or perhaps it's just the timing. But I think civil service reforms is something that we've got to do. Insecurity, someone was telling me the other day that, Ugo, don't you think that this government should just raise its hands and bring in mercenaries or maybe get people from the United States to just come and help us fight insecurity. All they need to do is just come and set up a base and then use drones and bomb out everybody in Sambisa forest. I mean, that's someone else's opinion, but I do think that there's got to be some radical steps that we need to take to fight insecurity, because if we don't fight insecurity in the country, then we will find it difficult to defend a lot of the economic policies that the government is pushing out. And then I tell my colleagues at Nairametrics, we've got to have declare a state of emergency on exports, because if we don't encourage exports, not just oil export of other kind of items, then there is just no way that we can have a stable currency. It's not possible. And if you don't have a stable currency, then we would always be exposed to inflation. And it's just as simple as that. So I think that this is something that we've got to be able to address as quickly as possible. So what are the outlook for businesses? Whether you're an investor or you're a small business and you're on this webinar, there are also a number of outlooks for us. I think that the CBN will likely continue to be unpredictable. We've seen what happened with the remittance policy of the CBN. All of a sudden, we all woke up 3 weeks ago and we had Naira for dollar. The CBN is also doing giveaway promo. So for every $1 that you bring in, they give you 5 Naira. I tried it; it actually works. In fact, when you bring in that money, they immediately create a DOM account for you. You don't even need to tell them. They will just create a DOM account for you and credit that DOM account with $1, and then credit your Naira account with the Naira bonus. So they're doing that already. Who knows what other policy that might pop up very soon? But the CBN, like you see, they're basically fighting just to keep this economy afloat with all sorts of policies. Now, whether it's strategically good or not, I think history will tell. We've seen CBN's ban on the use of cryptocurrency to fund remittances or to fund use of cryptocurrency within the banking sector. I think that the CBN is in no haste to reverse that policy, so that will remain. Another big number here is SEC policy on crowdfunding. I did mention that I think this was a very good policy, and I expect that this is a policy that will come into fruition sometime this year, if not next year. There's a lot of opportunities here, so if you're somebody looking to tap into this opportunity, so please go look at it because they have created frameworks that I think will also provide opportunities for new kind of businesses. The PENCOM transfer window, that's also something that is likely to take shape as we move on. It's currently going on right now, but I expect to see a lot more traction at some point. CBN policy on investing in foreign stocks. The challenge that has is that because of the ban or the capital controls that we have, it's getting increasingly difficult for some of us to diversify our portfolio. For example, I do have a foreign portfolio where I buy foreign stocks. But in the past, what I used to do is that I use my dollar earnings and then I move my dollar earnings into the brokerage firm that I use, and then I now buy dollars. But now you can't do that. What the government would say, what the CBN wants you to do is to basically sell that forex, convert it to Naira, and then deposit it into their own account, and then they will now go and buy dollars for you again. So it's just crazy because while you do all that, you lose 1 Naira or 50 kobo or something. But that's a policy that is likely going to keep happening. And then we'll have the CBN open banking policy. I think that it's a good policy for a lot of us, because what open banking means is that you're also going to have new startups, new businesses created that will basically help bridge or provide a lot more transparency within the banking sector. Let me give you an example. Today, you own an account in Zenith, Access Bank, Union Bank, Unity Bank, or whatever. So what if there was a platform that can just show you all your bank accounts in one single window? That's basically what open banking is going to do. So I think that is an incredible policy that the CBN has put forward. A lot of people don't know too much about it yet. I will watch out for it. The QR code policy is also very good as well. So these are just some of the things that I see from a regulatory point of view as risk and opportunities in the months and quarters to come. Non-regulatory risks remain. We're still going to have banditry and terrorism, unrest. I think I spoke to this already. Cybersecurity is something else that I think we should be wary about. Social media misinformation. That one is also very key. I think that we should be very, very careful about the way we use social media, whether at in your house, whether as an individual, and especially in the workplace. Very careful about how we use social media because of the way it can misinform people as much as it informs people. I also think that businesses should adopt a different kind of strategy, for their businesses, whether when you're engaging with government or regulators or how you communicate with your customers. I think you have to look at changing that dramatically. Communication methods have changed over the last decade or so. So if you're still communicating with your customers the old way, I think you've got to change that right now. You got to also be able to lobby a lot more with government as a body. So if you are listening and you guys are maybe you're members of an association of maybe exporters of coffee or something, you should be able to have a lobbying organization so that you can continue to push regulations that favor your business. I think businesses as well should do a lot more of outreach and education, and not just to the public, but even to their customers, because customers also need to better understand what you're selling. Programs like this webinar, from FundQuest, it's amazing. We've got to do a lot more of things like this because, it's not just for you to take from your customers. You've got to also be able to give back, to your customers, help them better understand, your own business or what you're doing to also improve the service that you're giving to them. And more importantly, the use of data is important. Even the government has seen that data is very, very important to them. So who are you not to want to use data? So I think data is something that we also need to make better use of as an organization. Ask yourself, how much of your customer do you know? How much do you have your customer data? Do you have their names? Do you know their names? Do you know their phone numbers? Do you have their email addresses? Have you been able to verify them? Do you know what they like? Do you know why they like your product? I think that you've got to, make better use of data as well, just as government is making better use of data, because with data now, you can better serve your customers, and then you can also better, cut all sorts of risks that your businesses face on a regular basis. Now, I see opportunities for businesses in 2021. I see opportunities in the energy sector, whether it's through renewables, metering, revenue assurance, electric vehicles. The opportunities for businesses here are huge opportunities, and the central bank is pumping in trillions of naira in here just to make sure that this sector moves. I also have a stake in this sector, so I know very well that there are opportunities in the energy sector, particularly electricity. Financial services sector, I think I mentioned crowdfunding services. I mentioned digital payments. Opportunities there is huge. The interesting thing is that foreigners even see a lot more opportunities in the financial service sector than we do. Hello, Paystack, Flutterwave. You've seen these guys, Kudabank, attract millions of dollars because they've seen that with the kind of population that we have, it's simply inevitable that there are opportunities in here for people to tap. And so this is where we also see a lot of opportunity. There's also a lot of opportunities in digital currencies. Young people typically like things like this. And I was listening to an interview from one of my favorite hip hop artists. His name is Nas, and he was saying something. He said that the law of nature, right, is something that you can't reverse. And in the law of nature, right, it appears that the old always wants to pull down the youth, the young. It always happens, but that inevitably the young always wins because they always grow, so they always kind of win, right? And so that's just a law of nature. And most times, if you want to know the businesses of the future or where the disruption will occur, you better look towards the young people because the law of nature would always favor them, will always favor what they want. And basically customize your product and your businesses to suit what they want. Now, supply chains as well are things that we got to look at. You've seen the challenges that we're having with the Suez Canal blockage. That's because supply chain is basically what the world revolves around. So at that very high level, containers opportunities for bigger companies, but at the very low level where a lot of us operate, I think that being able to connect businesses is another huge opportunity that people can tap into. whether it is through delivery or through customer service or through storage. I think that there are opportunities in here for people. You've got to be able to strategically put yourself in a position where you can connect businesses with customers and regulators and stakeholders. Anybody that can do that very well would always excel, would definitely have significant value in their businesses. Social e-commerce, I think, is an opportunity. We are currently in a gig economy. Gig economy means that you no longer have workers who just want to work for one person. I was in Abuja recently and I was speaking to a young lady and she was telling me that how she does 3 jobs. And I'm like, how do you do it? She says, one, she loves to cook. So she cooks and people pay her to basically cook, right? And that's what she does in the evening. And then she also operates as a lawyer for a law firm based in the UK, but they need a lawyer in Nigeria who helps them with their, runs in Abuja. And that's what she does. And then she also works for another law firm again as their own in-house lawyer. That's what young people like these days. They just want to be free. They don't want to be, committed to one person. Because we're in a gig economy. And that's why you see people these days with Instagram, you can start a business. You don't need to have, it's gone are the days when you need to go and buy a shop, rent a shop somewhere and stock your goods. Doesn't happen anymore. Just to want to grab a shop, take your phone, go to your Instagram, start your business, start to sell. And as people are buying from you, you don't even need to stock sometimes. Sometimes the stock remains with your clients or with your suppliers. You go there, pick it up, and you sell. So that's the kind of economy that we're in today. And opportunities will continue to exist in that space. Micro insurance schemes, I think that remains an opportunity. I mentioned it earlier on that the insurance sector is one that I feel it's about time that it blows. And if it does blow, you're going to see opportunities in microinsurance. Microinsurance, because a huge, about 55% or so of the economy is largely informal. And the kind of insurance that these people can buy is microinsurance. And I think that the way we sell insurance to organizations also has to change. You can't sell insurance to people letting them know that it is insurance. You've got to have a way of, bundling it, just bundle it into something. And I think that anybody who is able to, bundle insurance into another product that people would like would win. Because that way, people are buying insurance without actually knowing that they're buying insurance. Healthcare, I think, is another, huge sector. It pains me that no African country was able to develop a COVID-19 vaccine. It's another reminder that in this world that we find ourselves in terms of technology, in terms of innovation, we are still way, way, way behind. We're way behind. Russia developed a vaccine. Asia developed vaccine. America's developed vaccine. Europe, Africa, nothing, no vaccine, right? Like I said, we're very good at consuming. And the regional trade, lastly, I think is another important opportunity for us. The AFCFTA opens up this year, and I think that that's an opportunity for a lot of startup and businesses because now you have a wider market that you can access. Your market is no longer Nigeria, so don't think Nigeria now. Think regional. Know that your market is not just limited to Nigeria. So remember what I talked about supply chain. So now, in terms of supply chain, if you're selling here in this AFCFTA, then you should be looking at how do I service my customers in Ghana? How do I service my customers in South Africa? How do I service my customers in Kenya? It's through supply chains. That's how you do it. But I think this opens up a whole new market for a lot of us. And these 8 particular areas are where I do see opportunities for a lot of businesses. And I hope that some of you have taken this down. In terms of regulators, I think the regulators also need to change. For some of you who have influence with regulators or who have pressure groups like that particularly have opportunities to meet with regulators, I think they need to engage a lot more people. We also need to engage them a lot more because engagement helps with providing businesses with what they need to succeed. The interesting thing is that regulation is not really about stifling business. It actually should encourage business and provide some kind of guidance and control. But our regulators seem to think that it's a battle, it's a competition. And I think that's not how to go about it. Data gathering, I think I mentioned that already. And the regulators need to just get out of the way. Just allow businesses to succeed. Be an enabler and not an obstacle to businesses. And the ease of doing business, I've heard that over and over and over again. So this is also something regulators must do. So a combination of all of these things with what regulators must do, I think would help get us out of the quagmire or the economic quagmire that we find ourselves in today. Private sector also needs a rethink. I think that we've got to also pivot into local manufacturing and assembly. If countries like Vietnam, Thailand, Taiwan, if they can do these things, why can't we do it in Africa? I mean, we've got to move a bit towards manufacturing and assembly. How do we encourage the people in Neri, Aba, Ibadan, Port Harcourt? How do we encourage people manufacturing and doing things to actually scale? We've got to be able to push that. I think digital economy is also very huge for us in Nigeria because of our population. With the kind of population that we have, an economy that is digital, I think is an economy for the future. And that's why I'm very happy with the government's NIN plans, because with NIN, it basically paves the way for a digitally enabled Nigeria. Quality and standards very important, because it will have quality and standards of products and infrastructure, and then it's cheaper on the long term as a country. In terms of taxes, we've got to be able to hold government a lot more accountable. A lot of us pay a lot of taxes. Those of us who pay a lot of taxes. But how do we hold government accountable to the taxes that we pay? I think that's the kind of rethink that the private sector needs to do. Gender inequality, please, let's push that out of the way. We've got to give women a lot more opportunities to be gender equal with their men folks. And then climate change is very real. Please, as a private sector, let's also rethink how we mess up our drainages, whatever it is that we produce. Are we producing things? Are we thinking about the climate? Because in a country where there's famine, there's a country where there is a flood, in a country where there's huge rainfall, climate disasters, none of us can succeed. It's not just possible. So the private sector also needs to have a rethink for these 6 things. So, ladies and gentlemen, thank you very much. I know I took a little bit more time, but it was important that I just delved through all these things. Thank you so much, Kayode. And I'm ready to take questions.
Thank you very much. You've created quite the storm in the chat box there. A lot of people with their responses. Some of them agreeing, some of them not. What I'll do now is I'm just going to take one question that seems important. You've spoken about the government so much in your presentation, and someone has asked that since the government has been doing little for so long, or let's say so much with little effects, do you think the private sector can take us out of this economic quagmire that we find ourselves? In particular, looking at the Dangote refinery, do you think if the refinery becomes functional, it would help with the inflation, for instance, with respect to the transportation price, if we are beginning to produce this downstream products of the petroleum sector ourselves? What do you think that would do? And with the perspective of your last slide, talking about cleaner energy, the world is moving towards cleaner energy. Do you think it's a short-term fix? Would it work? And if it works, would it be a short-term or a long-term fix?
Okay. So for the first one, sorry, I'm just trying to take down the second question. So for the first one, I was privileged to visit the Dangote refinery sometime in February. And for those of you who have not been there before, let me give you an idea of what it looks like. So think of the entire Surulere. Think of Aguda, Ojuelegba area, Bode Thomas, Yaba, okay, maybe not Yaba. So Bode Thomas, Aguda, Masha, Lawansin, Ojuelegba. Just think of that whole space. The Dangote refinery is bigger than Surulere. We kept driving for over 2 hours from one tank to the other. It's a humongous place. And so what that tells me is that by the time this refinery comes into operation in 2023, like the claim will be, I think that it's going to save this country a whole lot in terms of forex, because a huge chunk of the forex that we spend today, we actually spend on importing fuel. So as a strategic economic asset, I think that the Dangote refinery can single-handedly, well, maybe not single-handedly, can play a major role in getting us, out of this economic quagmire that we find ourselves in. It doesn't mean that Dangote refinery coming on shore would mean lower fuel prices. No, I actually don't think so. I think it won't. I think that it does. It could. It doesn't. Definitely. It doesn't provide us with some kind of cushion. So I think it's important that people understand that. But in terms of energy security for this country, I think it's very, very significant. It's a huge place. A lot of money has gone in there. The fertilizer plant also opens this year. I think it was meant to open in March. I don't know whether it started operation, but it's bound to open very soon. Now, we also even still need modular refinery, because I think Dangote refinery is not enough. In as much as it's the largest single train refinery in the world, I think that it's not enough. We still need to have pockets of modular refineries across the country that can also support distribution of petroleum products across the country, as well as within the West African region. Is cleaner energy a short-term or long-term solution to our problems? I think it's both a short and a long-term. And I believe that the private sector, to your question, can get us out of this mess, but they can't do it alone. I think the private sector is doing so much already. They are contributing trillions of naira to taxes. They are employing people. They are trying to make money, trying to grow this economy, but the private sector can't do it alone. So the private sector needs the government to also function. You need a public sector that is also functional, a public sector that is nimble, a public sector that is abreast with the times. I was listening to a radio show recently, a comedy radio show, I think by OK Bakassi, and he made a joke. He said he went to the ministry to he wanted to apply for something, and they wanted to get his file. And so he met a lady there and says, okay, I need my file. And the lady says, oh, wait, the person that will give you the file hasn't come in yet. And then he waited. And then when the person now came and he said, okay, oh, good day, sir. I want to get my file. Oh, the person said, okay, just hold on. And he goes to that same lady that he went to meet to collect the file. So apparently that lady is the person who keeps the file, while the other guy is the one who gives the file. Can you imagine? Like crazy. And he had to wait there for hours so that he can get his file. Whereas all that lady had to do was just give him the file. But that's how civil service works. And in as much as it might sound like a joke, but that's an anecdote for the entire civil service of Nigeria. So you gotta have a civil service that is also abreast with what the private sector is doing. The private sector just can't do it alone, whether it is in agriculture, whether it's in oil and gas downstream or upstream, whether it's in the financial services sector, whether it is in technology. They can't do it alone. It's not going to happen. You would always need a government or a public sector that is equally creative, innovative, and nimble for things to actually, for us to get out of the mess that we find ourselves in at the moment.
Thank you very much, Ugodre. So, private sector, you can't do it alone. Anyways, thank you again, everybody, for being here. I will be handing the baton soon now to Mr. Oni. I am very sure that he would also be creating another storm with respect to what he did today. And I want to believe that at the end of the day, maybe a little bit of boxing of ideas between the two of them once his presentation is done. So, Mr. Oni, you have the floor, sir. You're muted, sir.
Yeah, thank you very much, Kayode. Thank you, Ugodre, for you've just shut down all the possible optimism that anyone could have about this economy. And it will take us to start rebuilding all over again. It will take us some time. But this is quite interesting because it's something that you've set in motion to challenge the native thinking that is out there. I mean, there are so much of those native thinking, especially in the public sector space. And most of the things you have spoken about are things that should make us to go back and rethink the process. It is sad that we have an economy that has these potentials that some of us have been talking about when we were in primary school in the early 70s. And now this is the 2021, and we're still talking about potential. It's so sad. But capacity to create value is one thing, another recreation of value is another thing, and that's what you've spoken about here. That look, the generation come, generations go, but it will appear time is running out. It will appear. I remember when I was in secondary school with Babangida regime and all that, and people just felt that, look, don't worry, this Babangida regime, let's sack everybody and then things will work. But here we are, maybe 30 something years down the road, we are still struggling. I will abridge my presentation because it appears Ugodre just took everything and packed everything together. And for those of you that missed Ugodre, you missed almost everything, but I would attempt to really summarize what he has said, and I will talk more on the side of the you part of it, because he spoke to business in his concluding part, and it's very, very important that how does it affect you as a person? How does it affect you as a family? Is thrown up some of the economic imponderables that could make you take decisions. And I'll be anchoring this presentation on that. I'll just keep most of the areas that he has talked about, and then so that we can have very excellent time this morning. Now, this is what I've prepared, thinking that I will walk you through, but he's done almost everything. He talked about how we got here, talking about the COVID thing. He walked us through on the numbers, the people, cases that were affected, about 125, according to the figure he shared with us, and close to about 2.7 million dead globally. So this is statistics, and it's a new world for every one of us here. Processes have changed, new thinking have changed. I belong to the old school, but COVID has meant that we need to restart thinking, doing business afresh. I remember when FundQuest started 2012, I couldn't imagine staying at home to say you want to work. You got to be here for 8 o'clock. But now we are creating more value working from home than working from site. So COVID has tremendous blessings, and new world, truth is we're all equal joiners. Statistics as regards how we all got here, especially looking at it from the local perspective, how COVID-19 started, the closing and the opening of airport, the NSAS, which Ugodre spoke about extensively, and the border opening, the politics of closing and the opening of borders, and the implications on the devaluation. You could see, I mean, I expect that government should be able to measure certain political pronouncements and programs and see the impact on the macroeconomic variables. Because if you're looking at the interest rate, you're looking at inflation, you're looking at unemployment, and if it's not adding up, if that's not the type of answers you like to get, you need to rethink those policies that are producing those answers. But it appears not to be so. We tend to mouth data, but we aren't using data. I doubt whether there is an handshake between the data managers of the economy. We have data scattered all over there, and I doubt whether that is being mined to be able to create the type of goal that we like to see. Ugodre spoke extensively about the second recession in 4 or 5 years, unemployment, and that was. I mean, how would an economy grow when you have about 35 million youth, people in their prime life, unemployed? You see, it's no rocket science. You cannot wish yourself into economic growth. It has to be planned. Growth is not an accidental process. Anywhere growth has happened, it takes deliberate, conscious, and intentional process to make it work. So when you see that a significant percentage of the people that should create value in any economy, or let's even localize it in an institution, those that should create value are lagging, then you are headed for the rocks. And I guess we've been having a cocktail of policy mismatches, policy somersaults, policy disconnect all around town. We're talking about the fiscal, we're talking about the monetary, we're talking about the infrastructural. All along, there is no harmony. Perhaps we should be thinking more about policy harmonization and seeing how it should work. Because one of the key things we've seen all around that people appear to be happy about is, oh, okay, we're out of recession. Guess what? If you look at one of the charts that Ugodre put out there, it has a very sharp V-shaped recovery. And elementary economics will let you know that when you have such a V-shape, a very sharp V-shape type of growth, it is not sustainable. That is not a growth that is sustainable. Even if you interpose that in a trading, if you are in a securities trading business, for instance, and you see a recovery, a so-called recovery, share price, currency price, recovery that sharply, unless it's gravitating towards a particular support or a resistance, then you see, once it touches that, then it's going to bounce back. If there is no planned and coordinated policies and pronouncements and programs and projects to make that happen, then for me, it's just a knee-jerk reaction to growth. So we can decide to say we want to spend ourselves out of recession. Yes, we may like what we have in here, real estate, GDP growth is just a bust, but is it sustainable? This type of figures, these are the sectors that MBS put out there that help the growth that we've seen, at least to come out of that quarterly, quarter-on-quarter decline that we call recession. But now we're talking about sustainable growth. How do we get to that sustainable growth? What's the path? Is it in agriculture? Is it in real estate? What has happened to the creative industry? He talked about I call them the innovative sector. Who is paying attention to the innovative sector in Nigeria? It will appear every drive, every attempt to create something new in Nigeria will be met with resistance, either out of governance, out of policy, out of the people who are implementing. But guess what? What I found out is this. He talked about regulators. It has a lot to do more with the mindset of the people. You and I get to the position of regulator with most of the regulators today. I'm talking about the monetary policy head in Nigeria. It was a bank executive. So we all operated from the private before we all migrated into the public sector. So what changed? If you have a growth mindset, the same thing should grow into the public sector. But it appears there is a type of spirit in the public sector that will just make you to just want to, in quote, misbehave. Because at the end of the day, if growth is the objective, if to make one sector or another is the drive, then there should be a cocktail of plan, programs, projects, policies that will make that happen. Because as we currently have it, look at the trade GDP, for instance, about 15% of the total that drove growth. And what is trade? It talked about the port quagmire that we currently have. It's a mess. In fact, putting it mildly, is a disaster. What we currently have, I mean, it's like the worst of Nigerians are just put in charge of that place. And you see, we've been battling lockdown. You can't go to Apapa saying and come back saying. It's not possible. You turn, a demon of something will just come over you. You can't come back thinking like a human being. It's not going to work. A friend told me that you want to see me in the office, things you need to do, come in as early as 4 a.m. Then you get the car park. Then I said, what time do you get to the office? He said, I get there 5:30. Then when is the resumption? I said 8 o'clock. So what time do you close? He said by 11. So what type of life is that? What type of value is being created? So does it take rocket science to move those gridlock, to break the gridlock? Does it take one to go to university to make that happen? No, it doesn't have to. I remember when Fashola was governor of Lagos, Oshodi appeared to be a major problem that, oh, you cannot change Oshodi, you just leave it the way it is. But it requires willpower. It did what ordinary Nigerians would have thought only military could do. But it broke that gridlock in Oshodi. It created life within that space. And you have track, and you get there after some years, you ask yourself, is this the same place called Oshodi? But there is something about culture to an economic growth. There is something about the thinking of the people towards economic growth. The question, therefore, is if the government doesn't feel that it's possible, the people will not follow. They need to see that trust element. We currently have a trust deficit in governance as we currently have it. Yes, we have a lot of interventions. If you sum all this that I have on my screen, it's humongous. And you ask yourself, where is the money? Where is the impact? What are being created? Are these being monitored at all? Who is in charge of ensuring that we are getting value for every dime being spent here? Who is in charge? Are the reports being made available? So, because if you don't track things, people only do what you measure. If you don't measure things, then people are not obligated to do it. If you pay attention to something, then there will be, you get a lot of mileage in it. So, it's no rocket science. We have to diversify this economy. Ugodre spoke about the need to pay attention to the non-oil sector. For crying out loud, the brick and mortar is not the economy of the future. It's not. The economy of the future are the one driven by technology, service. Kuda Bank, for instance, go and check the type of value that is flowing through that place, almost on a daily basis. Go and check some of those online platforms. He talked about investing in foreign shares and all that. People have created a way through applications. Applications are available now where you can invest from Nigeria in Google, in Facebook, on Twitter, all those stuff. You can buy the securities. Yet, instead of harnessing those platforms, instead of creating value, instead of allowing the young, I love the perspective he brought into it, saying that, look, you can't fight the youth. They will always win. And it's a truism. It's a truism. It is harnessing the energy of the youth, of the young, to say, hey guys, how do we do this thing better? Creating value from their thinking. You saw what happened during the NSAS protest. How funds were raised. It's no longer having to go to the bank. The economy of Nigeria has moved. The cheese has been moved. We need to wake up and smell the coffee as regulators. Even as private sector operators, it's high time that we begin to challenge the status quo. Engagement, he talked about engagement. Engaging more, not operating from the timidity point of view that we used to operate from. We have tarried too long in saying, oh, I don't want to lose my license. At the end of the day, if 50 of us should lose our license because we engage positively, it will be a good loss for me. It will be a good loss because now there are humongous opportunities in Nigeria that you don't have to leave your house to create. There are almost, this is perhaps the best of time to live in Nigeria. COVID has opened up opportunities that no one, not in my generation, you will have thought is possible. Because you could now engage and transfer, you can do almost about anything without stepping out of your house. When I left school in the 80s, it's almost like a dream that you won't have to go to the bank. I grew up with the traditional banks of the big four, the First Bank, the Union Bank, the AfriBank, and one other one then. And they were like the status quo for banking. But now, if you mention Union Bank and you mention some of these other banks, people will ask you, hey, are you for real? I could remember the first 4 years of FundQuest, we did not process a particular bank's check. In a bank, no client visited us with a check from that bank. No one for about 4 years. So what are you talking about? The new generation banks have taken over. But now, even if those new generation, the first year banks are not that careful, there are the digital banks that are waiting. They are about taking over the market. And that's where the cheese has moved to. People want convenience. You must give them that convenience where they want to be served. You must serve people where they want to be served. And that's where our publics has moved to. Now, let's speak a little bit about the personal finance and how does all this that Ugodre has spoken about, how does it affect you as a person, or how does it affect your family? He talked about inflation, and in very crude form, this is what it means. Your yam, your beans, your your onions, your pepper, your flour, your cement, your chicken, your rice, your food, the food component of the CPI, the Consumer Price Index, is going out of hand. It's no longer something that is it's no longer a statistic, it's something that you feel almost on a daily basis. Almost on it. And this is just about the food component. We have transportation, we have energy, right? And these are things that help to drive the insecurity that we currently have in the land. And with this as 17.3, the highest in about 5-6 years, then you are asking yourself, what next? With inflation at 17.3 and widening real return on inflation, don't forget your GDP is negative. Forget about the figure you are hearing. The real rate of GDP is in the negative territory, adjusted for inflation. And whatever you're putting your money, savings, whatever it is, adjusted for inflation, you're still in the negative territory. So it's a widening. You can see and here, this is at the point when the border closure thing happened. At this place, and you could see the widening since that period. Inflation just took flight. And of course, the Homo return took a nosedive. And that's just at January. Now, the external reserve, you know what is happening in that space as well, is on the downward trend. The correlation coefficient between those two, between the crude oil and the external reserve is almost 1 now. And don't forget, the political season is approaching. This is perhaps the only full calendar year we're going to run before the full-blown political activity starts. And what is going to happen? The tap on money supply is going to be less loose. You ain't seen anything yet, perhaps. So the COVID-19 ponderable have ensured that most of the policies that will even happen this year will be at best impotent, because they are not good in themselves, but there is so much of disconnect. There's no, I mean, people now trying to play to gallery. I'm the monetary supply regulator. I'm the fiscal. I'm the this. There's no coordination. So if it remains like this, inconsistent, there's no way we can get value. There's no way we can create value. And unemployment rate at 33, welcome. The mystery index, for the first time in my adult life in Nigeria, is peaking at 50.6. And what is that? It just measures that half of you have been the preponderance of mystery that has been generated is 50% in Nigeria, close to 51. And if we're to escalate this thinking with the insecurity that Ugodre spoke about, if we factor in the inefficiency, the rising inefficiency in governance, and the trust deficit in administration of public resources, chances are that we may be seeing 70. We may be seeing 70. Because if about 33 million Nigerians, youth, are out of employment, and the capacity utilization of the real sector is dwindling, you know what that means. I mean, you don't need to plot any chart and what we're likely to see. So how should you organize? What are the options left to you as an individual? Therefore, you face with all this devaluation, rising cost of energy, worsening infrastructure, insecurity and banditry, bad governance or trust deficiency in governance, stifling economic initiatives, and rising cost of electricity. How should you position? The structuring of your personal finance is key in this time. Investing, pension, It talks about insurance, savings, investment. Which comes first? You require a skill set to be able to balance the risk and the return mechanism in this period. You must, because most often than not, your disposable income is fixed. And guess what? You are losing it by the day. As inflation notches up almost on a month-by-month basis, as released by MBS, you are being shortchanged on a daily basis. But you are faced with the drive to create assets, the need to minimize your debt, grow your income, and become a low-cost producer, even as an entity. It requires budgeting process. You must learn to say, because this is where you're starting from. Here, income. Your income is fixed. If you are a salary earner, your income is fixed, maybe until the next promotion or until the next increment. You are lucky to get promotion within this period. You are lucky to get any increment within this period. But if it's not coming, it is fixed, fixed, fixed. It's locked. And adjusted for inflation is declining. So what do? Ensure this is the period to just do an accelerated repayment of your debt. And your expenses, this is not the time to need to buy those bags, the chain, the necklaces, this is the time to rethink your expenses. Asset creation, this is the time. I'm not talking about the depreciating asset. I'm talking about financial asset that has capacity to generate, to produce more. Talking about securities trading. Talking about strong positioning in investment, because this has to happen. If you are not investing, there is no way you can increase this. And in taking investment decisions, you are always looking at what could go wrong. That's your risk and return. And couple of years back, you heard about the MMM. People lost their shirts. And you heard about quite a number of pyramid schemes that people got into. Professionals, business owners lost their shirts. Even in the traditional investment like securities trading, like shares and all that, you must dimension your risks. You can buy a lemon. Whatever your stockbroker is telling you, you need to rethink that. You need to be knowledgeable in what you are investing in. Warren Buffett said he will never invest in what he doesn't understand. Well, I differ a little to that, because you don't need to understand that orange is good before you take orange. Because, I mean, if it's good for your head, go ahead for it. So where should you be looking at? There's generics, the traditional market vehicles that you have in the money market space, low interest rate, but you are guaranteed. One thing you can't lose, if you lose everything, you won't lose your principal. And guess what? In a season and time like this, if you're not making money, you should not lose money. If you're not making money, don't lose money. This is the time to hold on to every kobo that passes through you. And you must be accountable. Your budgeting process, personal budgeting process, must be up to par. And that is what is going to keep you through this period. If the recovery pace is kept, if we assume that we're going to see an uptrend from the V-shaped growth, if we're going to see a continuous growth, then a treasury bill may hit a double digit. If that happens, chances are that we begin to see some flight to safety from capital market onto the money market. So those in the capital market, you need to brace up. And you must be able to watch. Now we are seeing some, for the MPC to keep those rates locked at the same rate, it meant that they are looking at notching up. A time of expansionary monetary policy is coming. They felt that, look, we just have to rethink this process. It's no longer working. And with that, the capital market is going to witness a downturn. In fact, analysts are of the opinion that towards capital market could be quite anemic this year. And that's something to watch out for. So if you are long on capital market, there's a time to start rethinking your holdings. So let's look at what are the other alternative investment you may consider. Real estate, depending on your what. If you have a war chest, like Ugodre, for instance, I mean, why not? You could cherry pick some of those properties that are trading below their value. You could do some nice investment in town of Ikoyi there, downtown Ikoyi. I mean, it's good for people like him. You know, he knows how to spot opportunities. But who says you can't look at those areas too? I mean, especially you have some money that you can lock in for a period of time. Forex appears, I mean, he says something, and I can't but just agree with him. Hear this. You can't be in a depreciating currency environment and think you'll be a superstar without hedging your bet towards the appreciating currency. I am the opinion that the USD Naira exchange rate is going to, indeed, a back of the envelope analysis, PPP, that's purchasing power parity, will indicate maybe in the next 26 to 27 months, about 1,113 Naira to a dollar, depending on the commodities that you're choosing in the basket. So with that, it's no, you don't need to be a soothsayer to know that the pressure on the Naira is a question of time. The pressure, I mean, the support will break. The support will break at a time, and when that break, then you will see, it may not be a free flow initially, but it's a crawling peg system, exchange rate mechanism that we're currently operating. It can never be floating. Floating exchange rate will take Nigeria to about 1,007, 2,000, almost within a week. So the managed exchange rate system that we currently have tends to give a false sense of wealth. It isn't so. There is nothing, perhaps not until we begin to see Dangote refinery come on stream, that will be able to cushion the huge outflow occasioned by the fuel imports. But without that, hey, at 700, at 1,000, I think is still, given the type of attention we pay to consuming foreign goods, we are likely to see things really quickly spike. Cryptocurrency, a lot of risk in there, a lot. Return will also be quite aggressive, but you could lose everything very quickly. Liquidity, highly liquid, very, very liquid, and volatility is to the heavens. Volatility there is to the heavens, and you can beat it, go ahead and make it happen. But guess what? My generation may not be cut out for this. The generation that is driving this, especially in Nigeria, we need to pay attention to them. That generation, they have something, they are seeing something that some of us may not be seeing. They are seeing something that the economy managers are not seeing. Look at how quickly they raise money for NSAS. Can we put those energies together and create and drive the same energy into the crowdfunding mechanism, a platform that SEC is trying to build? Who says that if you go to Binance today, hundreds of millions are moving through that platform on a daily basis? Nigerians, young Nigerians are driving that platform. They are making impact within that, but government is isolating, the regulators are isolating those people. Guess what in economics? Once you put legislation on something, people begin to look for how to short circuit that. Once you put legislation on anything, the natural response is that, how do we break this? How do we make this happen? And that's what gives back to black market. Once you create scarcity of anything or you put legislation, people go under and make it happen anyway. Do you have capacity to look at what happens under? I mean, you can imagine the type of taxes that is possible. Who says instead of 5 Naira to $1, which the likes of the Ugodre are benefiting from, who says we can't have the same thing happen in the cryptocurrency space? Who says? It could be 50 kobo, it could be 1 Naira. Let's say, guys, this is what you want to do. If you don't come in the midst of the crazy people, you won't understand their psyche. You won't. You can't stand outside. A friend told me, he said, you can't stay in one place and enjoy watching of masquerade. He said, you need to go to places so you see it from different angles. It's the same thing here. Laws, policies, programs, and pronouncements must be sought. Don't be too quick to say these people are mad. Listen to them. Let's hear them out, and let's see how we can use those energy to drive growth. Private equity is still at a very infant level. Indeed, more of the people that drive private equity business in Nigeria, they are not within our radar yet. They are still operating, even within the regulatory purview, they are still operating below the regulatory purview. So we can't capture the value that's being created there. Crowdfunding, I'm so happy within this. If we get it right, which I trust the SEC is going to really pull all plugs to make this happen, that is the way to go. And I don't believe it's late. It is, we may have started yesterday, but today is another best of day for us to just make that happen. So I feel that, having said all this, one thing that has to happen is harnessing the energy of the new economy. We have a lot of problems. Guess what? We cannot solve all the problems if we start addressing them one after the other. There are instruments. You can't say that, well, let's first of all clear the Nigerian port. Before you finish clearing, another one will have started. Create growth, create incremental value across all pockets of zones in Nigeria. The stifling nature, the power, we hold the power. We are the one in power. We can make or mar you mentality should stop. And that is why people are angry. Businesses are hungry. Households are angry. Citizens are hungry. And you can't get your best from those who are hungry. You as a coach, people ask to play for you. Your player must play for you to win. If they don't play for you, you cannot win because you can't play the game yourself. And that's where I agree with Ugodre when he was talking about the need for the driver, the chief driver of this boat to step up or enable others. Go and make this happen. Give them the power, give them the freedom to act. So in FundQuest, what we'll do done best in 8 years is to ensure that we help you access some of these opportunities. We've done this for 8 years, and we invite you that we can do it for your business. We've created businesses in the educational sector, in the oil and gas, in infrastructure, for FCMG, across the board. And these are the products, some of the products. Our advisory team is being tweaked to ensure that we would continue to deliver value. And in this economy, all you can be is what you choose to be. Someone said to me, I think last week, said, look, the best of time to make money is even during a recession. He said, guess what? People are afraid. And when people are afraid, he said, get greedy. That's when you see opportunities. But you need a professional, a firm that can handhold you. They see things from different perspectives. They help challenge your thinking. Why you are afraid, they can see and spot opportunity and help you access such opportunity. So I present to you FundQuest. Thank you, ladies and gentlemen. I would love to take questions. Thank you.
Thank you very much, Mr. Oni, for that insightful presentation. It's been a very, very impactful session today. So one question that comes to mind. Mr. Ugodre spoke about the fact that Nigerians are like water, that whatever happens, we seem to always find our ground. And Mr. Oni also spoke about the fact that the new generation, they seem to be seeing something that the older ones are actually not seeing. Well, with these days where we have the Generation Z, the millennials, and a lot of dichotomies in generations, well, my question is, I heard recently the phrase, the hustle economy. Now, if you're looking at that section of the Nigerian economy, those people they fall under no records. They don't pay tax. They do businesses. They don't pay tax. They are not, like Ugodre said, actively looking for jobs. Well, Mr. Oni, what do you think would be the size, or what do you think these people, if they can be brought into that part of the economy where we can see figures, we can see metrics, we can see numbers, how big do you think the impact would be?
Oh, thank you, Kayode. That's very huge and awesome. Let's take the example of Ugodre, the lady in Abuja, for instance. She runs 3 jobs. Yeah. How many of that is being taxed? One, perhaps, maybe at best two. The laptop economy, the people you tagged, you targeted as the NSAS focused, the people that put laptop at their back, watch out for those people. Kayode, one of your clients in advisory, created business over a 21-month period, right from his room, and was earning monthly euro income of about 4,000 euro on a monthly basis, right from his room. So the question is, check the age profile of those people who are raising money. Ugodre spoke about the this guy that sold his stake in for about 200 million last year. What is his name now? Paystack. The question is, these guys are creating enormous value that perhaps no one has perhaps put a figure to it. Maybe it could be like 25% of the current GDP that we're talking about. And they are outside the tax bracket. The people who are on Upwork, if today you could be on Upwork and earn thousands of dollars on Upwork, right there in your room, without leaving your house. The people you call Yahoo Yahoo today, not all of them are into Yahoo Yahoo. They just are plain creative. There are people who are doing online training. They're just there with their WhatsApp, they are facilitating, doing similar things we are doing. Yet they're outside the purview of the mainstream economy. You call it hustle economy, you call it laptop economy, whatever you call it. I do know that it's going to be somewhere in the range of between 70 to 25% of the GDP. Because most of these flows happen in USD. Most of them happen in USD or in foreign currencies. So it should be, I mean, maybe I should leave it to Ugodre since he has a platform to be able to research that area and educate us.
Well. It's 85% of GDP. But that would be big if we add that to what we have now. Okay, Ugodre, over to you. I did say that there would be some sort of intellectual boxing at the end of this presentation, and there seems to be one. You did mention the fact that you want, or you would, in your opinion, the regulators ought to get out of the way. They are part of the problem, or they are a key aspect of the problem. And Mr. Oni in his presentation said, while they are the problem, it's not regulators in quotes, because, I mean, it's the mindset of the people. It's the people that get to be the regulators. And he pointed the example of the present CBN governor. He was once the MD of a bank. He was once a player like the rest of them. So what do you think, in your opinion? Is it really the mindset of the people, or is it, I mean, does something happen when a person leaves the stage of player and gets to the position of regulator?
Kayode, that's a very, very brilliant question, and I've pondered a whole lot on this contradiction. And I think that it all boils down to incentives, and it's incentives that typically drive human behavior and what we all want to achieve. So let me give you an example. Today, you are an Arsenal player and you're playing against Chelsea, and you have all the motivation and incentive that it takes to beat Chelsea. You want to score against them. And then next season, you switch to Chelsea, right? All of a sudden, the season before, you scored a goal against Chelsea and you held your jersey and you were doing this. And then the next season, you play for Chelsea and you score against Arsenal and you're doing this. So I think incentives are what plays here. So it's the same thing. So you go from the private sector trying to lead your business through competition and whatever issues or whatever challenges that they have. And then you move to the private sector, and it's that same thing that drives you. So, sorry, you move to the public sector as a regulator, it's the same thing that drives you. So as a CBN governor, someone like Mefele is driven by a different set of targets, a different set of goals that have been handed over to him. So at that point, he's no longer thinking in terms of a Zenith Bank. He's thinking more in terms of what I've been told to do as a regulator. So, but I think what we would like to expect and what we should, expect to see is people who are acting more in line or, acting in favor of an industry or of a sector of, so rather than you playing for Chelsea or for Arsenal, you're playing for the Premier League, right? You're playing to entertain everyone. So you're regulating, yes, within a set of targets, but your target includes to ensure that the private sector also does very well. So if that is your target, then you see that we're all perfectly aligned, and then the incentives are aligned, and you have better regulators. But the regulators we have now have a different set of incentives. So it's either, oh, don't make prices go up, oh, collect more taxes, oh, make sure that you collect as much money as you can from people that are not paying taxes. Oh, this guy is my political enemy, deal with him. So the incentives are just different. So that's really the problem, Coyote. But what we need to do is have those incentives very well aligned. Once they're aligned, I think you see regulators that would better help the private sector. Thank you.
Oh, thank you, Ugodre. Ugodre says it's incentive. Well, who am I to argue? There's a question here that excites me. The question is that it's in terms of population, and I'm going to address it to Mr. Oni this time, since he's of the older generation. So the question here is, Mr. Dada Emmanuel says, I have this notion that the astronomical increase in our population is also part of our woes, as we don't have sufficient infrastructure or government willpower to support this, which is one of the reasons we are now exporting humans to countries like Canada, depriving us of some good human resource. His question is, would it be right or not for government to seek regulation to population growth? Mr. Oni, you have the floor.
All right, thank you, Coyote. Regulation for population growth in this part of the world, in a country that is highly religious, will be resisted. You could have another Maitasin riot in your hands. We've had a similar thing. We didn't even get to regulating population growth. There was a particular vaccine that was deployed some years back, and people said, look, is to make certain people from certain geography in Nigeria, location in Nigeria, to give birth less. It's something that is worrisome. How can you do that? How can you control population in Nigeria? Education is key. The best tool you can use because, hey, if you can't feed them, why giving back to them? But if the understanding is that the more you give back to, the more access you have to public wealth, then you can never change that. Because don't forget, those growth is fueling what we're currently experiencing in terms of insecurity, in terms of banditry. And if you put that together, and we're not creating commensurate wealth to go around, if population growth is doing positive in the range of about 2.6 year on year, and GDP growth is doing, now we're talking about anemic growth. So it is just normal. We will overwhelm the system. And it's you can't say that. Okay, imagine a scenario, just take population growth as say you have 4 people in a room, and suddenly you multiply that by, say, 10, you now have 40. You get discomfort. You begin to, there'll be conflict. Oh, she's looking at me somehow. Oh, I can't breathe. She's sneezing. This one is happening. And there will also be, there will be some issues that will happen and will hurt everybody at the end of the day. So introducing policies, I think more of education rather than government legislating. In any case, I stand to be corrected. I don't know how that's going to work if you legislate that. Unless maybe you are saying incentive. If you say, if you give birth to 1 instead of 4, then we pay you some money. But guess what? People will have sidekicks outside and may not be registered.
It may turn into a business. Thank you very much, Mr. Oni. So one other question, and this is going to go to Mr. Obi-Chukwu. Now, you spoke about the Dangote refinery. There's a question here that says, do you think this refinery could have been done by the public sector on the same scale? According to you, who has eyewitness experience of the place, you said it's bigger than the whole of Surulere put together. So I'm going to infuse two questions here. The first question is, do you think it could have been done by the public sector on the same scale? And then the second question is, if a large percentage of our export earnings come from oil, what's the possibility of diversifying? Like how profitable, how advantageous would the diversification be if a larger percentage, more than 3/4 of our export earnings, is from oil products, oil and gas related products? So Mr. Ugodre, over to you.
Okay, thank you very much for that question. So, could the Dangote refinery be done by the public sector? I think that on the basis of the current public sector that we have, I mean, my response is an emphatic no. I don't think that they would have been able to deliver the refinery. Now, suffice to add that the Dangote refinery is actually hugely funded by the federal government. A lot of people don't know that. There's a lot of federal support behind that project, even though it's private sector driven. And, they might not want to call it a PPP, but I think what basically works is when the public sector, when the government backs a private sector initiative, then you see better execution because the private sector will execute better. The private sector will do this because it is more profit oriented, it is more market oriented. They are a lot more interested in bringing costs down so that they can improve margins. So their incentive is entirely different from the public sector. So imagine if it was the government building the Dangote refinery. You can be rest assured that Nigerian labor will tell them that the price of the petroleum product should be fixed. Abi, fixed, don't change the price. It must be this, it must be that. Employ people. Don't also. So you can't have the public sector or the government be the face of things like that. It's got to be private sector driven. So yeah, public sector can't do it, but today in this economy, my answer is an emphatic no. Now, in terms of is diversifying away from oil profitable? Well, I don't think you look at things like this from the perspective of profits. It's more of why does an economy diversify its exports? You see, today in the world, every single country aims to have one asset, dollars. Any country that has the most dollars typically has a very stable economy and has an economy that can withstand a lot of pressure. It's just a fact. Go and check all the countries that have huge dollar reserves. And the only way you can have huge dollar reserves is if you earn it. You've got to be able to earn it either through through exports, and then that means you import money, or through capital importation, which is investments. You must have an economy that is able to attract dollars. Think about, is it Dubai? Is it China? Is it Vietnam? Is it Thailand? Is it Indonesia? Is it India? They all have robust external reserves because they've been able to diversify their export base such that they can attract a lot of dollars. And it's not just oil dollars. Now, oil dollars would be great for us as a country if we were not this many. But we are 200 plus million people and you're number 8 or so in top oil exporter. How is that anything? So that can help us. In fact, I've told people that we probably are better off exporting Nigerians to Canada, this other country, and ensuring that that it repatriates through remittances. I think we're probably better off than exporting oil, and because that's really our strength. So for us to be able to have a more stable economy, we've got to be able to diversify beyond oil. And there's services, there is knowledge, there is our enterprise, there is even, using the labor, the population that we have to be the engine of economic growth within Africa. So those are the kind of things that we can do that would attract dollars. And then a lot of the amazing things that people like Flutterwave and Paystack and Andela and all these other guys are doing to bring, foreign investment in this country, more and more of it is going to happen. And those are the kind of things that we will do that would help diversify this country away from oil. Let me ask you, Karadi, when was the last time you had a startup in oil, in the oil sector? When? Saying that they're exporting oil or they're producing. When was the last time? None. You never hear any. In fact, when you hear them, the only thing you hear is oil block. They've collected oil block. They've done bid licensing for oil block. And then one bank has now lined up $100 million or $50 million or $1 billion in loan for them. That's it. You never hear any startup saying they are bidding for oil block. They don't bid for anything. They roll up their sleeves and get to work and start to innovate and start to employ people and start to produce and start to disrupt. That's all they do. So I don't think that we can continue to stow this line if we want to have an economy that is solid. Thank you.
Thank you, Ugodre. Thank you, Ugodre. Now, looking at the U aspect of this today's discussion, the economy, we've seen the economy aspect a lot, and now the U, talking about investments. So two questions here. The first question I would answer myself. The question is directed to Mr. Oni, but I can provide that answer. The question was, do you have a plan for low-income earners? Yes, we do, Mr. Samuel Akimbola. We have plans, investment plans for low-income earners. We even have credit plans for low-income earners. If you go to our website, www.fundquestnigeria.com, you should be able to get more information on that. So Maria Glover asks, Mr. Oni, the inflation rate is increasing and currently at 17.33%. Most of the rates of cash and money market instruments are currently quite low. Now, even if your capital is preserved, she thinks it would be a bad idea to invest then. She wants to comment on this. So, Mr. Oni, over to you.
Oh, thank you, Kayode. My understanding of that question is, since inflation is this way, should I just spend everything I have? If my interpretation of your question or understanding of the question is correct, then you know that that's a recipe for disaster. One thing, when you find yourself in an inflationary environment, is a cycle. And there are opportunities also, especially in asset acquisition in inflationary environment. You see people also flipping assets that you can take for a penny, and the need to have cash. In an inflationary and an uncertain economy like we have, you must be near to cash. You must have cash or be near to cash. That is, and I take that again, you must have cash or be near to cash. You'll be dead if you don't have cash in this environment. So, having said that, if you, because you feel that, well, the real return will be negative, and thus you decide to, you can hedge. And while you are creating wealth, the idea is to narrow the gap. As you narrow the gap, you may not be earning at par with inflation, but you are narrowing the wide gap. And when you're talking to a professional, they are telling you, take this. It's like creating a portfolio. When you have a portfolio, depending on your risk appetite, depending on the volume of investment you're looking at, depending on your tenure and the ethics profile of the person, we can create a portfolio for you that will mirror inflation, that will mirror your return expectations. So for us, my advice to you is you can't do without investing. Either you are buying, you are investing in paper security like security, financial security, or you are investing in tangible, with an idea of flipping. So you keep creating value with, first of all, in an inflationary environment, you are narrowing that negative. And over a period of time, you can grow to meet up and then surpass, get into the real return territory. But I would advise that you should not stop investing because you're in an inflationary environment and say you want to spend everything.
Thank you, Mr. Oni. Well, if one should have money and you're looking at least some sort of sustainability, I don't think the best idea is to run away from where you can get, no matter how little the extra would be. So there are numerous questions here, but unfortunately, we wouldn't be able to take all of them. We would be able to answer them much later. We will be sending the answers to you alongside the recording of this event. I am going to invite, I'm going to ask the speakers for last comments. Then I'm going to take a final comment from our chief host. So Ugodre, any word? What would you tell people about, what to do going forward?
I think that Nigerians are very resilient people. I think that we're very strong people. I also think that there's something that Nigeria has. Nigerians are self-organizing. We're a self-organizing nation, which means that, think about it. Wherever you live, you have an estate resident association. You guys are providing your own water, electricity, roads, security. That's what we do. Where there's a vacuum or where there's no governance, Nigerians step in and provide for themselves. There's self-governance initiatives that we are pushing, and we hope that people can also, be part of it. Let us roll up our sleeves and let us continue to put pressure on the government to create an enabling environment for businesses to thrive. Like I said, ease of doing business is what would unlock the potential of the private sector. And the sooner government takes this seriously, the better for us. They have tried to do a number of things through the payback committee, under the vice president. But you do realize that without the weight of the president, without declaring a state of emergency on ease of doing business, we will not get traction. So that is what I wish for. And then for people who are looking to invest, I think that you got to invest, in a diversified portfolio that earns you Forex as well as earns you Naira. It is no longer enough for you to have a portfolio that earns Naira. You've got to have a portfolio that earns Forex, whether it is through investing in US-based stocks or investing in cryptocurrency or Forex in general. But you must have a Forex basket in your portfolio. And then, of course, believe in Nigeria, invest in Nigeria. The stock market has a lot of value in there. The fixed income market also has value. Real estate also has value. So invest in Nigeria, because at the end of the day, if we don't invest in this country, then we will all have each other to blame. Thank you all very much for having me. And I hope that I've been able to share my thoughts. And I've also learned a lot, especially from Bisi Oni. And I thank you all for all the questions and all the nice comments as well. Thank you very much, Carol, for doing a fantastic job.
Thank you, Ugodre. Thank you, Ugodre. Ugodre says, believe in your country, at least, but also have your half hand or half leg somewhere else too as well. Mr. Oni, over to you, last comments.
Okay, thank you very much. Our job and joy, apart from providing financial advice free here in FundQuest, is to give hope. We train youth. We take people, we believe in Nigerians. Ugodre says something, we're self-organizing people. I don't disagree with that. We've seen professionals, guys from Nigerian universities making significant impact in workplace. So we just need the platform. We can replicate many FundQuest or grow the FundQuest brand, the Nairametrics. It just came from boom. And then it's not, when you create brands that people can connect with, and you talk about leadership, the leadership is strong, is up there, is not lethargic, is not docile. You just want to make things happen, challenge people, tell them they can do it, give them hope, show them direction. Then you see something happen. We have to give this to the next generation. The youth of Nigerians are very, they are brilliant, they are energetic, they are disciplined, they can do a lot. we need to create that enabling environment. For us, that's what we continue to do. When we see opportunities, we need to channel those energy, help them take those opportunities and let them see what they can become, show them the big picture, and then we can create more value for this country. At the central level or at the government, public sector level, my advice is we need more collaboration. Guess what? Nigerians don't need too much. We're not demanding for too many things. Nigerians need to be appreciated. Nigerians need to be treated well. Nigerians they are demanding that recognize us. Let us partner. We also have something to contribute. When you listen to people from that angle, chances are they're going to do more. So I believe in Nigeria. I'm in Nigeria. I will remain in Nigeria. So there's no place like home. Here it is. So thank you so much, Kayode, for making this happen and for inviting me to speak at this webinar today.
Thank you very much, Mr. Oni, and thank you for gracing us with your presence. Okay, we would have a final word from our chief host in the person of Mr. Abiodun Akinjayeju. Sir, you have the baton.
Thanks, Kayode, and I must thank our guest speaker for the time he's had with us this morning. Mine will not come in form of a presentation, but more of challenging our thought process and our thinking, particularly as Nigerians. And I will say that first and foremost, that the cumulative economic result we get is as a result of the individual actions of we economic actors. We must admit that. It is what we do that is the cumulative effect that we get in the GDP and in the economy. When Ugodre was talking about after the first mention of the introduction, he talked about the foreign exchange earning, the need to export, which is good, fantastic idea, and we need to generate foreign exchange. But do we as economic actors think Nigeria? I don't think we do. He was making an analogy of some sports. He talked about Arsenal, he talked about Chelsea. I didn't hear about Warriors. I didn't hear Enyimba. I didn't hear Mighty Jets. That is who we are as Nigerians. We look foreign. We like foreign. We don't think Nigeria. And that is what is cumulatively affecting the exchange rate, the GDP, and all that. And it goes to even to the CBN, to the politicians. I challenge the politicians quite a lot. And when you hear them talk, you then know where Nigeria is, where we are. And that's the first thing I want to talk about. The elephant in the house is government and the governance structure of Nigeria. Without being blasphemous, bring AJ Gabriel to Nigeria today as the president and AJ Michael as his deputy. They will fail the way Nigeria is governed and structured. We must think that. We continue to do the wrong things and we think we're going to get the right result. It's not going to happen. So Nigeria's governance structure is faulty. We must admit that. And having said that, and it dovetails into the cost of governance, into our security issue, into the policy or the uncoordinated policy that we get, is because of the governance structure that we run. We economic actors will try our best possible within the framework of these restrictions and the inhibitions to be able to do what we have done. But until we get that governance structure right, we are not going to go anywhere. We will continue to totter along, but we need to face that. We are a nation of about 85 million voters, only less than 30 million votes in our election. What happened to the balance of the over 50? Those can actually make a difference and vote out the people we don't like and bring in somebody who's going to manage the job better. But we don't. That is who we are as Nigerians. Selfish, self-centered is the way it affects me. I'm going to talk for FundQuest here because I'm an economic actor. We want to make money. And that has resonated in all that we have said here. How to protect our assets, how to deliver value and all that. But nobody thinks Nigeria. That's one problem that is facing us. And it affects us, our cost of governance, where you see, it's just like you as Mr. Ugodre, you earn 100 naira, you pay your driver 20 naira, you pay your guard 20 naira, you pay your cook 20 naira, you pay, at the end of the day, what you spend to improve your life is only 10 naira. That is the way Nigeria is run. Our budget year in, year out is 15% capital expenditure, 85% recurrent. Who does that? That is what is facing us, and that's where we are getting this result. So let's put government aside. Now let's talk about the elephant in the house, why we are here where we are, our power sector. I had, because of reading an IMF paper over this last week, this same World Bank that actually supervised or at least gave us technical assistance into the power sector reform that happened in the JAG regime. If you read that paper, Nigeria was taken to the cleaner in the way we did the power sector privatization. It was bad. And that's where we are with this power sector. And until we address that elephant in the house, industry cannot thrive, business cannot thrive. Until we address this power sector, we are talking about artificial intelligence, we are talking about robotism. Without power, how is it going to happen? We need to face this. We must face it. At the end of the day, if we are not careful, this power sector privatization we say we have done may be reversed, and we are back to square zero. Something to address our mind to. It is important. And without that power, we cannot have industry, we cannot have good business, we cannot have robotism, we cannot have artificial intelligence. It's like you are running an artificial intelligence without power. How is it going to happen? We are trying, I mean, just as you said, estate here, estate there, our generator, the solar power in the small units. If we look at the kind of powers that we have within those small units, it's more than 50,000 megawatts that we are doing ourselves. Why that? It's in the country there be a coordination of this such that it can dovetail into the national level and everything go into a grid that can service everybody. We must pay attention to some of these things as a nation, as a people, as investors. Having said that, the third thing I also want to talk about is the issue of exchange rate management, exchange rate policy, and export earning. I'm sure one of our clients will be here probably on this webinar. Some 24 months ago, an airline realized that anytime they bring goods, it's a cargo aircraft. Anytime they bring goods to Nigeria, they go back empty. The same thing, all those vessels that come to Apapa, when they bring goods, 99% go back empty with their containers. That's to show that we don't have exports here. We try as much as possible. I think we spoke to that airline with this client. We want to see how we could actually get some export, agri-produce into those empty cargoes to go back to Middle East and wherever. The kind of obstacle we met on the way, everybody gave up. The same thing is happening here. If you bring in almost a shipload of 40 containers, almost about 5,000 every week, and the 5,000 containers go back empty, that's not how to run an economy. Those containers need to go back with export produce. That's how we can earn forex. But we are not seeing that happening. Why? Policy issues, logistics of getting those produce. Our farmers have left the farm now because of security issues. Nobody's farming. We haven't seen food inflation yet. By next year, June, that's when we are going to see, they are supposed to be doing harvest by October, November. That's when we'll start seeing the dire straits that we are in with this security issue that's going on in the Middle Belt area. It's a big problem in our hands. So all this are interwoven. We as economic actors and they as government, we now see them, we as them. No, we must see ourselves together. Our fate is coterminous. So we are not going to encourage our investors to safeguard their investment, to do that without talking the bigger issues. And we must address our mind to that. And I want to challenge Ugodre in your analysis, please, always factor this into consideration. We need to challenge these people. We need to change the governance structure. We need to change the way we run this economy. I mean, CBN just woke up and banned cryptocurrency, started doing banjo for dollar remittance. You are not going to do all those things. I'm not going to get result from that, all this policy flip-flop. And that's what we are faced with. We put square peg in a round hole. We think we're going to get good results. We see a deputy speaker in the House of Rebels say that they cannot present a petition for an American people that are based in America as if they are not Nigerians. And these are the kind of people who get into governance. Until we address this issue holistically. It's like Nigerian development. We are climbing tree from the leaf, on the top of the leaf. That's what we are doing. Our development is climbing tree from the leaf. We're going to crash. So, gentlemen, and I want to thank the participants in this program. I've enjoyed everything I've had, but we must think Nigeria. We must live Nigeria. And we must spend Nigeria. Thanks so much very much.
Thank you very much, Mr. Akinjaeju. That was a powerful end to a powerful session. So on this note, I want to thank everybody for coming. Thank you for giving us a part of your Saturday. We hope you enjoyed this webinar as much as we did. For all those questions we've not answered, we would endeavor to answer as much as possible and send them after the event. And we would also be sharing the presentation, the recording of this event across your mail addresses. If you want to reach us, you can always reach us at www.fundquestnigeria.com, and we are always available to render those services in the financial space that you would wish to play. Thank you very much once again. Thank you, Mr. Oni. Thank you, Ugodre. Thank you, Mr. Abiodun Akinjaeju. And thank you all our wonderful attendees today. Good afternoon and enjoy the rest of your weekend.
Thank you.
Thank you.